I'm Olivia Voz. Nenko.
I'm Steve Guilfoyle. Today is the 243rd anniversary of the birth of the United States Army. Today, Street Smarts comes to you from the World War II Memorial at Battery Park City in New York.
Let's have a toast to the U.S. Army.
So 243 years of romping and stomping and keeping the wolf at bay.
Yes! And I am quite bullish on these Chipotle margaritas.
It's not every day you drink a margarita from Chipotle.
Now wait a minute, did you tell me it's Donald Trump's birthday today too?
It is also the president's birthday today.
No one's making a big deal of that.
I think it's also Flag Day.
Flag Day?
There's a lot of stuff going on today.
Wait a minute. Oh my God, so he's a Gemini?
I have no idea.
That explains it. All right, now we have all the answers. But we need some more answers when it comes to the economy. So, Stephen,
sure.
I read your recon today, and you were bashing the Fed.
It's always a special day when you get to write something negative about the Fed. It was kind of my forte for years and years. But with a more pragmatic guy like Jay Powell running the place, I didn't know I would get these opportunities again.
Okay.
So, I take a look at the projections yesterday. All right, they project the Fed funds rate out to 2.4%. by the end of this year. At least that's the median. And that's 2 more rate hikes this year, which, given the state of the economy, is not crazy. I see the case for that. But they have the Fed funds rate at 3.4% by the end of 2020. Meanwhile, the growth isn't there according to their projections.
Right. Why was it declining each year?
Yeah,
that didn't make sense to me.
Well, they see GDP at 2.8% for 2018, but dropping to 2.0% in 2020 and dropping further after that. And that's obviously because they expect the boost from the tax cuts to be somewhat transitory. Mm-hmm. They also don't see inflation. They see inflation at, I think, 2.1% this year and maybe 2.0% in 2020, or maybe it's vice versa. But they see basically a flat line for consumer level inflation ongoing, which means they don't expect growth. Actually, they expect the opposite. They don't expect inflation, but they think they'll have an easy time raising rates by another full point after raising it 2 more times this year alone, which is fantasy land. If you understand politics and the real world, that's not possible. Either they don't really have a grasp on what they're able to do in the real world economy, or they didn't do their homework.
All right, so there's some inefficiencies there.
Without a doubt. And we've seen that for years with the Fed. I was just hoping with something of a change of cast. The cast is different now. I was hoping for something better from them.
All right, well, we also have retail sales today. It was just like a crazy week. Am I right, people?
Yeah,
crazy.
You're right. And the macro's been very strong. Retail sales were right in line with that. We even saw a boost in the department stores, which is awesome because we never see that.
I know, go Macy's.
Although I took profits in Macy's and Kohl's this week. I'm still long some of both, but I couldn't avoid these prices. I got out of stock.
Understandable after that crazy run up in retail stocks. I totally understand your position on that.
Without a doubt.
Now wait a minute, what about furniture?
Exactly, I was just going to go there. Actually, we saw a little bit of drop off in furniture while seeing a boost in building and construction, which I thought was kind of odd because sometimes they go hand in hand.
Well, I'll tell you why else it's odd, because places like Urban Outfitters, who owns Anthropologie, and Walmart, they put a lot of money towards expanding on furniture.
That is very interesting, and I don't think this will be a long-term item. I don't see furniture sales as especially strong or especially weak, and in one of the sectors, despite Wayfair, there's still one of the areas of retail which I don't think the Amazons of the world, the internet space, can really capture that much, because I know my wife would not let me buy a chair unless we sat in it.
Well, I don't know. I like seeing that Wayfair box. Most of my apartment is basically all that and house and whatever. But speaking of that, we have some viewer request stocks, and let's go into UPS because they might be delivering that furniture.
Well, let me put this down so I can use both hands. Now, obviously, it's going to be a little bit of a tougher environment. That wasn't me. Obviously, it's a little bit of a tougher picking stocks with interest rates on the rise. You're going to have to be a little bit choosier. Obviously, it should have helped the banks, but the yield curve compressed.
Okay.
So that's a little bit tough on the banks. The banks have been coming in on a day that you would think they should have been rising.
Yeah.
We still have CCAR ahead, so I'm not ready to bail on the banks. But you did bring up UPS. And UPS, let me get to my right.
Now the chart is a little sloppy.
The chart is definitely sloppy. This comes from Ryan in Ohio. I want to make sure I get the names right because I mixed them up last week. So Ryan in Ohio asked about UPS. Forward PE of 15 times earnings. Not bad. Dividend yield 3.1%. That's a positive. Operating margins are fine. Leverage free cash flow is fine. 3-year sales growth, about 5%. Last quarter, 10%. So sales are on the rise. So I like UPS, okay? But I like some other stocks in this area more. But let's go to that chart first. We see we're setting up a golden cross. We're looking at a 50% retracement here. Our target price is 130. Our panic point is 112, but we're keeping it on a short leash. I like FedEx better.
I was going to ask
and
that.
I've liked them better. I've made money on
They're
FedEx in the
reporting
past.
next week, right?
Yeah, and I just like them better because they have slightly faster sales growth. XPO is one that Jim Cramer's been pounding the table on. A lot of people like that. Their sales growth is just out of sight. And a lesser known, but growing even just as fast maybe as XPO is ZTO. It's a Chinese delivery services company that does work here in the US, and that one's only about 21 bucks. So the retail investor might want to take a look at that as a cheap way to get into the space.
Well, I did a story on this earlier this week about the technicals with the transports, and they broke out of a nice triangle out of that channel. So that's why I see maybe UPS, maybe.
And that's the growth economy.
Some room to run there.
As long as the economy's growing, the airlines are growing, the railroads are growing, boxes are being delivered, and people...
And he says yes.
Holy cow.
They like UPS over there. They agree.
Well, what was I saying again?
You were saying our next viewer request.
Okay, next viewer request. Where are we going, Voz?
Okay, GWPHARMA.
This one goes out to Mikey Salmon, an old friend of mine that we used to call Cupcake. He works down in North Carolina. He's a great guy, and he was a great worker on the floor of the New York Stock Exchange. He was a fellow broker.
Hey to you. All right.
Okay, so he's asking about GW
now,
Pharmaceuticals.
I was like, what is this stock? So this is a medicinal marijuana stock.
Right, it's a cannabis play, but from the medical side. All right, and it's really, Mike, it's really something of a shirt show, if you know what I mean, from a fundamental point of view. The forward-looking PE is a negative 29. Operating margins are negative 1,900%. Leverage-free cash flow last 12 months was negative $148 million. And the 3-year sales trend is negative 41%. But the stock is picked up on speculation.
Okay, yes, and it is in a bullish uptrend.
Without a doubt.
With a little pullback. Trends have pullbacks.
Now, the stock has plenty of cash. It's not a concern. They don't have a liquidity problem, Mike. Current ratio is over 11. Quick ratio is over 10. Those ratios are strong when they are over 1. So these guys don't have debt. They've managed themselves perfectly. They were in good position. They have plenty of cash. And they're owned, 7% of the company is owned by management, which I like because the guys running the place have skin in the game.
Hey, good point.
Right. So
how'd you find that figure?
I looked it up.
Nice resources.
Anyway, I see 135 as your point of resistance, Mike, on this thing, which is, that's wrong. Oh, long-term resistance. I'm sorry, Mike.
Okay.
Long-term resistance for most of 2017 was 135.
He'll forgive
Then
you.
you had your breakout in May, and the stock soared to a high of around 165.
So what are you saying? You bullish or bearish on GWPHARMA?
I'm saying right here around 150, I would make the sale. But I think it's going to bounce around 142 or 135. That's where you had that 135 resistance level is now going to be support if it gets there. But Fibonacci helps you come in around 142. So I would make the sale, and I would start buying it back around 142 with the intent of being complete by the time I hit 135.
Nice entry point. Okay, next, John Davies.
John Davies from London.
I can't wait to hear his accent when hopefully he comes on Street Smarts.
I can't speak like that.
I don't know what was that. I don't know what kind of accent that was. He's probably like, oh my God, please never do that again.
All right, John from London has asked us to take a look at BlackBerry.
He's been talking about BB for a while.
He has, and he's been on top of this. You know,
Great request, John, thanks.
I usually look at what John says, but I really didn't look at this one, and I probably should have because I found some interesting things when I did finally take a look at the name.
Okay,
right?
so what
it's a little expensive, 82 times forward-looking earnings. I'm not thrilled with that, all right? The 8.3% of the float is short, which is a positive. Sales trend is negative. But that's okay because they're transitioning from a hardware company into a software company.
83%?
8.3.
Ooh, 8.3. I'm like,
right,
dang.
No, that's a little
could be a
high.
great move
That's not crazy high,
higher.
but it's a little high, and it's a support for the stock.
Okay.
All right, so what you're going to see here on the chart that we're showing you is the trend lines. We have that trend line of support that broke back around early April. Then it caught itself down around $10. We have a new trend line on the rise. Now you can have those trend lines cross each other. It has a very good chance, I believe, of hitting a 14.5 top, which is where it peaked out in the beginning of the year. As you can see in my little orange circle there, the stock suffered from a death cross that didn't really impact the name, and it looks poised to actually benefit, if it would, from a golden cross.
And that's interesting because it did obey that death cross a few months ago.
Exactly. So what I want to do with this name, actually,
Precisely.
I actually almost bought the name ahead of this video, and I didn't buy it because I felt that I would be talking up a position of my own after just buying the stock.
You thought it was unethical.
There's something unethical about that. So
Yeah.
I do intend to buy these shares as soon as we get back to the office.
Nice.
My target price is 14.5. This is an entry point for me. Where it's trading now, I think, is around 12.25, 12.35. That's an entry point, which means I'll probably buy about an eighth of my position.
Now, does this stock have any chance if it goes below 12?
Yeah, I think it can go as low as 11.75, which is where I want to buy
Okay.
most of my position. That's my target for my real target for purchase. But in case I'm wrong and it goes higher from here, that's why I get in on an eighth of my position or a quarter of my position.
And what is BlackBerry entering into away from phones and into
They're
what?
transitioning from hardware into software. They're not going to make the phones anymore. That's not their business. Now they're making products that can be used on other hardware. So they've totally changed what they were doing because, let's face it, what they were doing wasn't working.
Well, yeah.
You know, except for Bill Griffith, my old friend on CNBC, I don't think anybody else was still using a BlackBerry.
You're seen as, I don't know, I think it's kind of cool to have a BlackBerry, but not anymore.
Well, physical keyboards were cool, but that's the past.
Neat. All right. Can't wait to see what that company has in store for us.
Oh, I think so. And you know what? I'll be long it myself, John, pretty soon.
All right, guys. Well, that about wraps up Street Smarts. Thanks for joining us on this beautiful day.
This is a beautiful day. So long, gang.
See you next week.